So in this video I'm going to show you how you can do a top-down analysis, and I'm going to start by the weekly, then go down to the daily, the 4-hour, the 1-hour, and even the 15-minute. So I'm going to start on the weekly, and on the weekly we see we have a volume imbalance and a fair value gap. And whenever you have a volume imbalance and a fair value gap, you want to mark out the whole range. So now that we have touched this range, we could expect a reversal. So now that we know we want to go higher, we can go down into the daily time frame. So on the daily, we could anticipate price taking out recent days high because we know we want to go higher on the weekly. So now we have a target on the daily, then we could go down into the 4-hour. And on the 4-hour, the first thing that I see is a volume imbalance. And we have already touched this volume imbalance. So now that I also know we want to go higher on the 4-hour, I can go down into the 1-hour. And on the 1-hour, we also have a volume imbalance with a 4-hour volume imbalance. So now that I also know on the 1-hour we want to go higher, I can go down into the 15-minute time frame. So now that we know we want to go higher on both the weekly, daily, 4-hour, and 1-hour, we want to find a bullish setup on the 15-minute. So because we are at the 15-minute time frame, I want to use the ICT kill zones to know where the highest probability to taking a trade would be. So right here we form a gap. So this gap could be used as a bullish entry, but I mostly look for value gaps. And right here we open at the Asian session, but I mostly look for either a trade in the London session or the New York session. So right here we start at the London session, and as you already see, we have formed a fair value gap that we already touched. So now we could expect price going up to this recent day's high. And right here we take out the recent day's high. So for this next example, I'm going to show you on the euro dollar. And right now we're on the weekly. So on the weekly, we took out buy side liquidity and we're starting to go bearish. So now that we know we're starting to go bearish, we could look for a bearish PD arrays. So right here we have a bearish fair value gap that we could use to anticipate price going lower. So now that we have this fair value gap, we can go down into the daily. So right here we test the fair value gap, and now we could anticipate price taking out recent day's low. So now that we have a target for the daily, we could go down into the 4-hour. And right here on the 4-hour, we want to look for any bearish PD arrays forming. And as you see, right here we have a bearish fair value gap. So now that we already touched this bearish fair value gap, we can go down into the 1-hour. And also on the 1-hour, we have a bearish fair value gap. Now that we have a target on both the weekly, daily, 4-hour, and 1-hour, we can go down into the 15-minute. So on the 15-minute, we want to use ICT kill zones, as I said before. and we mostly want to take a trade in the London session or the New York session. So right here we form a fair value gap, and right now I mostly look for either a retracement when we take out these highs, or a retracement when we touch this fair value gap or this fair value gap right here. So let's see what happens. So right here we close above both of these fair value gaps. So now the only option is for us taking out this buy side liquidity and then going down and taking out this previous day's low. And right here, these London highs work, and we take out this previous day's low. This video was a bit more complicated than my other videos, so if there was anything you didn't understand, just comment down below. And also, if you like this video, please like and subscribe.